Thank you, everybody, for joining us tonight. We just wanted to go through this presentation here to understand how EITC, or Education Improvement Tax Credit Program, works. And Kevin Kelly has been gracious to us and to me to be able to come here and do the presentation for us. So, Kevin.
All right, thank you, John. Thanks everybody for joining tonight. I will try to be sensitive to time, but I also want to be sensitive to completion of understanding of this whole program, which is really very simple. When I give church talks, I whittle it down to 90 seconds. When I talk to people in an elevator, I whittle it down to this line. Do you want to turn a dime into a dollar? At the end of the day, that's exactly what you're doing. So let's walk through. I'm going to tell you a little bit first about the foundation and who we are and what we do, and then I'll walk you through the EITC program, just so you have an understanding of exactly what happens with us. So the Foundation for Catholic Education is a nonprofit organization. We are a scholarship organization that was founded 13 years ago with the mission, and we maintain this mission to promote the growth and vitality of Catholic elementary education in the Archdiocese of Philadelphia. So when I say that, I talk about the fact that we work specifically with the 102 schools that are managed by the Archdiocese, not only on EITC, but on a whole host of other levels relative to, say, strategic planning, marketing, enrollment, curriculum, instruction, staffing, everything that goes into the management of a school. Regina Luminis doesn't fall under that category. You're not managed by the Archdiocese of Philadelphia, but you're a perfect example of the fact that we still work with all of our Catholic schools, whether they're elementary or secondary, private like you, or private or parochial. So, and I hope you all can see. There we go. I'm just going to move something out of the way. All right. So in terms of what we have done, in the past 13 years, we have distributed more than $35 million worth of scholarships, reaching over 75,000 students in those 13 years and touching over 160 schools. So there are roughly 160 Catholic schools in the Archdiocese of Philadelphia. Again, those 102 elementary plus our high schools. Then there's the Regina schools, there's the Independence Mission schools, there's private schools like Waldron, and private high schools like St. Joe's Prep and things like that. So we reach all of those schools as well through this program. Just having some little, there we go. We're anticipating this current year that we will distribute about $6.5 million in scholarships, reaching about 6,000 students. So we're maintaining that aspect. We anticipate this year that I'll be raising about 10 million in the 2023 year that will be distributed in the 24-25 year. So there's growth that continues to happen. So this EITC program that we're going to spend the bulk of our time on is a program that you guys have been using at Regina Luminis for years. Now, I mentioned at the beginning that the Foundation for Catholic Education is a nonprofit organization, right? You understand what that is. We are a scholarship organization. By virtue of being a scholarship organization, that allows us to receive funds from contributors like you, and then distribute those funds to schools. We do that through this special purpose entity. But what I'm showing you here is what the impact is of the EITC program at Regina Luminis for the past 3 years. And you see in the 21-22 school year, there were 23 donors in the EITC program for the foundation. Because remember, we are one of many scholarship organizations. There are about 1,000 scholarship organizations in the state of Pennsylvania. So we are one of them. Now, there are probably 3 or 4 that you work with. You work with us, you work with Blocks, you work with Children's Scholarship Fund, you might work with Central Pennsylvania Scholarship Fund. We're kind of the 4 big ones in the area. But through us, Regina Luminis received over $71,000 from 23 donors in 21-22. The next school year, you dropped the number of donors. You lost a handful of donors. What's that? Six donors were lost, but that number increased from 71 up to $105,000, which is terrific because more and more students and families could be accommodated through those additional funds. This year, this current year, is absolutely a banner year for you. You're recouped, those 6 donors, added 1 to it, so you went up to 24 donors, and then your total amount of that's being raised through us is $136,700. Now, your need is probably in that $300,000 to $400,000 range. Your financial need is probably roughly about $350,000. John, correct me if I'm wrong on that one, but we're in that relative ballpark. So that $136,000 is great and helps a lot. And of course, you're getting other funds from other sources, but wouldn't it be great that through one organization, you would be able to address the need for all students at one shot, to have that 136 number say something like, oh, I don't know, 336. And the challenge of that is identifying who those donors are. So this program, this EITC, Educational Improvement Tax Credit Program, began about 22 years ago in 2001. It was in response to the voucher program that failed in the legislature in the late 90s, early thousands. So the state came up with this program originally for businesses alone to participate so that they could take their Pennsylvania state taxes and redirect their taxes to a cause that was approved by the state, but that was important to each business. So of course, Catholic education is something that's important to us. So businesses started funneling money, funneling their state taxes to support Catholic education. So basically, this is a way to redirect your tax dollars. Instead of funding a program in the state that you might not like or agree with, or building a bridge in Erie. Not that building a bridge in Erie is intrinsically bad, but it doesn't help you in your backyard. Wouldn't you rather have your taxes do something for you? Currently in the program, there are $338 million worth of tax credits that are reserved for this program. The foundation we control about 11 million of that amount. With respect to the current budget, the 2020, what year are we in? 2023 budget that still has yet to be approved by the state, we are anticipating that 338 million is going to be increased by about 150 million. If that happens, we anticipate being given even more EITC funds, like taking our number from 11 million up to roughly 15 million based on what we've applied for. So there's a lot of tax credits that are out there that we want to make sure that we use up, because the last thing we want is for somebody who doesn't like this program to come back and say, hey, gee whiz, you see, they left this money on the table and they didn't use it, so let's put it back into public education. We don't want that. So I want to be able to exhaust every dollar of my tax liability during the year. So this participation in this program is very, very simple, and it's open to now businesses of any type, right? And there are 4 types of businesses: an S Corp, an LLC, an LLP, or a C Corp. Now, the C Corp thing is important to note because a C Corp is a publicly traded company, right? And C Corps in the past hadn't been able to join the special purpose entity. C Corps had to apply to the state on their own. So we are constantly encouraging people to join our SPE, special purpose entity. So individuals or any kind of business can join if you have Pennsylvania state tax liability. It requires for us a minimum contribution of at least $1,000. You designate it to a Catholic school in the Archdiocese. We only work with Catholic schools in the Archdiocese of Philadelphia. And for that 2-year commitment, you receive a 90% tax credit, thus turning a dime into $1. So for 10 cents, you gave $1 to the school. All right. For $10, you gave $100 to the school. So do the math from there. So figuring out what your tax liability is probably your first question. So let's assume, just for the sake of argument and the fact that I also used to teach Latin and Greek, so therefore we're going to use very easy numbers. If you have somebody who earns $100,000, their Pennsylvania state tax liability is about $3,000 because your Pennsylvania state tax rate is 3.07%. So that person who earns $100,000 can contribute anywhere from $1,000 up to $3,000. Or you can choose any amount in the middle there. We do ask that you use whole dollar amounts like, $2,300, $2,450. But when you get into those single digits, it's a mess for our accountants because we at the end of the year are dealing in millions. So having zeros at the end is necessary because it has to go. We can't give back like $4 to the state, and the state, it's a mess if it becomes that. So we're constantly, telling folks, hey, make it whole dollar amounts. So you would be, if you earn $100,000, your tax liability is about $3,000. When you're doing your taxes, and let's say we're going to take two different scenarios. We're going to talk first about the W-2 employee, and secondly, we're going to talk about the 1099 employee. So let's say you're a W-2 employee, like me, like John. We work, we get paid every week or 2 weeks or month, and our state taxes are taken out of our paycheck every week, 2 weeks, or month through the entire year. Well, at the end of the year, when you join the special purpose entity, you're going to write a check to that special purpose entity of the foundation. All right, so you will have paid your taxes during the year, and then you're going to write that $3,000 check. In effect, yes, it seems like you're paying your taxes twice. But here's the great thing. You're going to get anything that you overpaid back, plus you're getting that 90% tax credit. So in reality, you're going to be paying $300 for a $3,000 contribution. Let's talk, however, if you're a 1099 employee, you're an independent contractor, you are, let's say you're, you work from home in your own business, and you pay taxes quarterly. Our accountants have told us it's in your best interest. You don't have to pay those quarterly taxes. If you're really tense about it, pay $25 to the state every quarter, just enough to let the state know that, hey, we know that you're alive, we know that you want your money, you're going to get it. And then at the end of the year, you write your tax check to the special purpose entity of, let's say, $3,000. When you do your taxes, so now we're back up here, you've earned $100,000, you're a W-2 employee, your taxes have been taken out. So let's say your total payments goes down there on line 18. I don't have anything written on that line, but let's say if you're a W-2 employee, well, you paid $3,000 to be part of the SPE. You paid another $3,000 because you paid your taxes. So you've overpaid your taxes. So you'll get that money back. And let's say, on the other hand, you are a 1099 employee. Well, let's say you didn't make any estimated payments. You wrote that as zero. You contributed $3,000 to the program. So you're going to say, well, gee, all right, then I paid that. So my my tax is only going to be $300, not $3,000. All right. These are the easy, simple commitment forms. So they're identical. There's two different forms. One, if you're a business, that's on the left, and one if you're an individual. This is the most common one, the one on the right that most people use. But I show you both in case there are folks on the call who own a business or who know somebody who owns a business. The only difference between the two forms is the Social Security number for the individual is needed, or for a business, we need your EIN, your employee identification number. Otherwise, it's exactly the same. So if you're an individual who wants to participate, you would put up in this line how much you want to participate, at least $1,000, and any number up to your tax liability. So I have one donor who does this every year, and he contributes every year $950,000. So he writes $950K in that little line. I also have donors who contribute at $1,000. So the $950,000 donor and the $1,000 donor are using the exact same form. There's no difference. They're going to indicate when they want to participate. They tell me their name, address, social security number, and we go on from there. This is the only form we ever ask you to complete for us outside of the operating agreement that you'll get as part of your contract when you join the program that you'll get much later on. And I tell people all the time, it is easier to participate in this program than it is to register your child for school. It's this one-page form with, you know, the amount that you want to participate, name, address, and social security number. You mail that in to me, send that in to me. And once you do that, I put your information in our database. I contact you in September telling you it's time to write your check. Once I do that, you write the check by November. Then we send you a form called a K-1 in February. You'll need that to do your taxes so that you can claim your 90% tax credit. You do your taxes in April. You get your refund in the summer, I hope. And then come September, we send you the email. You don't have to do the form again. We send you the email. You write the check in November. You get your K-1. You do your taxes. You get your refund. It's a simple churn right after all of that. So I've mentioned this a few times, this SPE, this special purpose entity. So a special purpose entity is nothing more than a business, right? It's an LLC that we have created along with the state. So every scholarship organization like us and Blocks and so on, all uses this program through these special purpose entities. And the sole purpose of the special purpose entity is to hold the funds that are donated so that we can then write checks from those funds to send to the schools that have been given those funds by their donors. So that check, let's say for Regina Luminis for that $136,500 for this coming school year, you know, the schools are to send the foundation a spreadsheet saying, hey, gee whiz, here's the list of kids who are receiving those those scholarship funds. Here's how much they were given. We compile that. We send that off to the state. So that the state knows that the EITC funds that have been given to us have been used appropriately. So when you join the program, you become a member of that special purpose entity, and it's to that special purpose entity that you write your check. So you won't write the check to the Foundation for Catholic Education. We manage all those accounts. So let's say you join and you get assigned to Catholic Education 2017-2018. That's the name of one of our SPEs. It's probably named that because that's probably around when we applied for it from the state. So that's the name that the state gave us. Well, that's the name it stays forever. We can't change it. I'd love to make them all nice and organized and easy and call them FCE1 and FCE2 down to FCE11. But that's just not the way it is. So when you get told, hey, write your check to Catholic Education 2017-2018, please don't send the check in saying, oh, Catholic Education 23-24, Kevin, that's what you really meant. You made a mistake. No, I didn't. I meant what I wrote. You know, so we make it very clear who you write the check to. If you have questions along the line in this whole process, let's say you know, you are unsure about who you write the check to or where to send it. My email and my phone number is on every document you'd receive. So you just call me, you just email me, text me, whatever. The same is true if you change your amount. So let's say today you say, oh, I'm going to join this program. It makes no sense not to. And I think my tax liability is going to be $6,000. So I commit, I'm going to write a check for $6,000. So you fill out the form, $6,000. And as it comes to around November, you realize that the last, you know, 2 or 3 or 4 months for you in terms of your income has been much better than you anticipate. And you say, I can really afford to do $9,000. That's all fine. All I ask is that you call me, you email me, you let me know, hey, can I increase my amount? I will probably tell you yes, the earlier you tell me. The later you tell me, the greater the chance is that we exhaust our EITC, our tax credits that we have. So like I said, we own about $11 million worth of tax credits. Right now, I have about $4 million left of that. So we've already found about $7 million worth of folks who are contributing. So we just need to continue to find folks. 2 years ago, I had a magical situation happen where I got a phone call from the financial advisor for Meek Mill, Kevin Hart, and Michael Rubin, that's the triumvirate who runs Fanatics. And they had a tax liability of $15 million. Tax liability of $15 million. So we were able to take about 3 million of their tax liability, but as soon as we took that, and it was mid-December, we exhausted all of our tax credits. So anybody who contacted me after December 15th, I was in the position to have to say, I'm sorry, you're late. So the earlier you sign up for the program, the better it is, because I reserve those credits for you. So that special purpose entity has a couple of things that I need to make you aware of. Number one, the timing of the refund is something that the foundation cannot control. Of course, that's a Department of Revenue issue with the state, right? So, you know, well, there are folks who have gotten their refund already this year, and there are folks who are still waiting. Last year, I heard of folks who got their refund as early as June, and I know of one gentleman who didn't receive his refund until January. There's just no way for us to manipulate the state or the system to make it go any faster. Secondly, you will have to have the capacity to float that cash from the time that you write your check in November, right, until you get your refund. So if you're a W-2 employee and your taxes are being taken out, you just have, and you say you're going to participate at $3,000 or $5,000, you just have to have the ability to make sure that you're not going to have count on that $3,000 to $5,000 or whatever, you know, from the time that you write the check until you get your refund. And finally, this one kind of irks me. Oops, I got to go back. This one kind of irks me is that technically nonprofit employees are not permitted to participate in the program. The reason for that is that the state started this program for businesses only, and the state defines a business as a for-profit organization. When they created the special purpose entity, the SPE, right, the state said that the SPE could only be joined by businesses like S Corps, LLCs, LLPs, or C Corp, or employees of business firms. So a business is a for-profit organization, right? Or and those employees had to be employed by for-profit. Now, exceptions include folks like if you are a nonprofit employee and you own a sliver of stock, well, you can participate. So here's a good example of that. My son, God bless him, is an attorney, lives in the city of Philadelphia, works for the city of Philadelphia in municipal government. Technically, he's not allowed to participate in the program because he's a nonprofit employee. But I reminded him that when he was like 2 years old, his mother and I gave him Disney stock as a gift. Disney does business in the state of Pennsylvania. Therefore, he can participate in this program. Teachers very often want to participate in this program, and they're trying to look for that angle. You know, if they work second jobs, like a lot of teachers do to supplement income, if they work second jobs and they have a W-2, well, then they can participate easily. Though, if they file jointly with a spouse who it works for a for-profit organization, then they can participate. You know, and a good example there is, you know, a nurse might work, you know, might want to participate in the program, and her husband works for Merck. You know, which is a for-profit organization. So there are always kind of little angles around it. So there's 5 simple steps to participating in this program. Number 1, you send that commitment form to the foundation. You mail your check when you're told to do so. Right now, it's going to be in the fall. You'll get that K1, and that K1 is the form that proves to the state that you participated in the program and you're eligible for that 90% tax credit. And you'll get that K1 usually by the end of February. We're not obligated to get it to you until March 15th, but we really make an effort to get it to you as early as possible. You complete your taxes and use your credit. And then, like I'm told, with any shampoo, it's rinse and repeat. You do the same thing year over year. Send that commitment. Well, actually, I take that back. Send the commitment only happens once. After that, it's get the email from me in September, mail your check in the fall, get your K1 in February, complete your taxes, use your credit. One thing I will point out here, and I very often will delete this slide when I'm showing it to folks in elementary school, and I usually use this for folks in high school, but very often we are asked by private secondary schools. So private secondary school, like let's say St. Joe's Prep, or Malvern Prep, or LaSalle. you know, what's the one I could, gosh, my mind is blanking. John, help me. What's your high school? Martin Saints. Sorry. So Martin Saints is a private secondary school. We do ask those folks when they participate in the program to allocate at least 10% of their contribution to the Catholic elementary schools in the Archdiocese of Philadelphia, since that's core of our mission. So my example there is, you know, a friend of mine is an attorney. He contributes $20,000 a year. And when I told him this, he said, that's fine. So he sends 18,000 to the prep, and he sends 2,000 to St. Simon and Jude, where his children went to grade school. So who benefits from this? Who can take advantage of this? So the folks who are eligible to receive these funds, the families have to apply through FACS, and FACS is nothing more than the elementary school version of FAFSA, right? And if they make, let's say they're a small family with one child, if they make $123,697 or less, then they would probably be eligible to receive EITC funds. And for every child that they have, for every dependent after that, they're adding $18,514. So a family with two would, their income limit would be no greater than $142,000. So imagine this. So imagine you have a small family with one child and they make $120,000. They'd be eligible to receive. Well, that family, don't forget, could also be participating in the program at $3,000. So you have a family who could participate in the program for $3,000, taking advantage of the 90% tax credit. But then on the other side, because they qualify for EITC funds, they're also benefiting from EITC money, from the scholarship, which is a great thing. EITC and OSTC, we didn't really talk about OSTC. OSTC and EITC are relatively, they're partner programs. EITC is more universal, but there are some students who qualify for what's called OSTC funding, depending on where they live, where that student lays their head. So if they lay their head at night to sleep in a school within a school district that's at the bottom 15% of their PSSA scores on the public school side, then they would be eligible to receive OSTC funds as well. So some schools, John, you're not one, though, some schools receive EITC money and OSTC money. So some of our schools that are actually in the city of Philadelphia, some schools actually in far western Chester County near Coatesville are eligible to receive OSTC funds. But I want to point out what that income limit is. $123,697 for one, for somebody who has one child is pretty generous. That number will increase probably in the next 2 weeks. The announcement usually comes out from the state in 2 weeks, and that 123 will probably go up at least. I'd be surprised if it doesn't go up to about 130 or 135, but we'll see. So I've tried to be, well, I did it in about a half hour. I'm a little bit over time. I apologize for that. That's what you get when you get an Irishman talking at the end of the day. But let me ask if there are any questions. I'm happy to go back to any slides for you.
Thank you for joining us. Again, if you have any questions, you can reach out to us. I hope and pray that you're able to participate and continue to participate and continue to encourage people to participate in this program to support the students of Regina Luminis Academy, to continue to form smart saints, because that's what we are about, giving our students better education, great education, and we can support the saints. All right.
Thank you. Thanks for having me. Have a great day.
Yeah.
Thanks very much. Thank you very much.
Thank you.
Appreciate it.